Hello and welcome. In this short session, we'll be looking at how dividend income is taxed in Singapore. This topic often confuses new accountants and business owners, so we'll break it down clearly, step by step. By the end of this video, you'll understand how dividends from Singapore companies are treated under the one-tier tax system, both for individuals and companies, and how hybrid instruments are classified for tax purposes. Here's what we'll cover today. First, what Singapore's one-tier corporate tax system means. Second, how dividends are treated for individuals and companies. And finally, how certain hybrid financial instruments are treated when they are classified as equity. Let's start with the basics. Singapore operates a one-tier corporate tax system. That means companies pay tax on their profits at the corporate level. Once that tax is paid, any dividends distributed to shareholders are considered tax-exempt. The income has already been taxed once at the company level, so it isn't taxed again when paid out as dividends. Before 2003, Singapore had what we call an imputation system, where dividends carried tax credits, and shareholders sometimes had to pay additional tax. The one-tier system simplifies this. Now, tax is paid once on the company's profits, and that's the end of the story. No more double taxation, just a clean flow of profits to shareholders. Let's look at a simple example. Suppose a company earns $100,000 in profit. It pays the corporate income tax of 17%, which is $17,000. The remaining $83,000 can then be distributed as dividends to shareholders, completely tax-free in their hands. No further tax is due on that amount. So what does this mean for individual shareholders? If you receive dividends from a Singapore resident company, those dividends are exempt from income tax. In fact, you don't even need to declare them in your individual income tax return. They're already covered by the one-tier system. This example illustrates how dividends become tax-free under the one-tier system, benefiting both companies and individual shareholders. The same applies to companies that hold shares in other Singapore resident companies. When a holding company receives dividends from its subsidiary, which is another Singapore resident company, those dividends are also exempt from tax. This ensures that profits are taxed only once, at the operating company level, and not repeatedly as they move up a corporate group. Now let's touch on hybrid instruments, such as preference shares or perpetual securities. These instruments can have both debt-like and equity-like features. If such an instrument is classified as equity under accounting standards, the payments made on it are treated as dividends, not interest. And because they're dividends from a Singapore resident company, they're tax-exempt under the one-tier system. However, if the instrument is classified as debt, then the payments are considered interest, which is generally taxable income to the recipient. So the classification matters. There are a few common misconceptions about dividend taxation in Singapore. Myth 1. All dividends are taxable. Not true. Dividends from Singapore resident companies are exempt. Myth 2. Dividends must be declared in the income tax return. Again, no. Exempt dividends do not need to be reported. And myth 3. All preference share payments are interest. That depends on the classification. Only if the instrument is treated as debt will the payments be taxable as interest. To summarize, Singapore's one-tier system means profits are taxed once at the company level. Dividends distributed by Singapore resident companies are tax-exempt for both individuals and companies. Payments on equity-classified hybrid instruments are also tax-exempt. Only payments that are truly debt or interest remain taxable. Simple, consistent, and designed to avoid double taxation. Thank you for watching. We hope this video gives you a clearer picture of how Singapore-sourced dividend income is taxed in Singapore. If you'd like to explore more accounting and tax topics, feel free to reach out or leave us a comment.